It's time for the Orange Weekly with Howls and Growls.
Hi, I'm Sats Howls.
And I'm Naka Growls.
Together we're
we are
Howls and Growls. Welcome back, dogs. It's been another high-voltage week in the markets, capped by geopolitical friction and legislative gridlock in DC. But let's cut through the noise and fetch the orange signal with the stories defining Bitcoin and stacks for Week 3, 2026. On this week's Bitcoin recap, Bitcoin hits 3-month highs. The Fear and Greed Index reaches neutral for the first time since October. A social engineering scam drains $282 million in Bitcoin and Litecoin. A Bitcoin whale, dormant for 12 years, cashes out. And Belgium's KBC bank is open for Bitcoin trading.
And in our weekly stacks recap, Stacks goes on the yield offensive with the Yield Strategies panel. The network's TVL Milestone stabilizes above $130 million. Zest protocol surpasses 700 sBTC supplied. Bitflow Finance launched the BFF Army Learning Hub. And the Stacks developer ecosystem hits the 1,000 contributor milestone.
Let's dig. Bitcoin shattered a multi-month period of consolidation this week, rallying past the critical $94,700 resistance level to touch a midweek high of $97,800. The breakout was driven by a perfect storm of positive US inflation data, CPI coming in at a cool 2.7%, and massive institutional demand. Spot ETFs saw a resurgence, led by Fidelity's sBTC, which recorded a staggering 351 million in a single day, signaling that Wall Street is aggressively positioning for Q1 2026. Adding to this, market sentiment is undergoing a major reset as the Bitcoin Fear and Greed Index climbed into neutral territory this week, marking its first appearance in this zone since late October 2025. The index jumped to a value of 48, a significant recovery from the extreme fear levels seen just days prior. The shift followed Bitcoin's rally, which also triggered the largest short liquidation event in the last 3 months. Still, getting liquidated now and again is the expected par for the trading course. But our next story will send a chill down many spines, as a single investor was high by one of the largest single thefts in history, losing over $282 million in Bitcoin and Litecoin. The incident, first flagged by on-chain investigator ZachXBT, was not the result of a technical hack or software bug, but a highly sophisticated social engineering attack. The victim was manipulated by attackers posing as Trezor customer support, who convinced them to reveal their recovery seed phrase. Once the attackers gained access to the hardware wallet, they immediately drained 1,459 Bitcoin and just over 2 million Litecoin. Following the heist, the perpetrator utilized decentralized protocols like Thorchain to swap the assets into Ethereum and Ripple, eventually converting a large portion into the privacy coin Monero to obscure the trail. This massive influx of buying pressure caused the price of Monero to spike by 36% in just 1 week, briefly touching nearly $800. Next up, the Bitcoin market witnessed a historic diamond hands exit this week as a wallet inactive for 12 years reawakened to lock in massive gains. According to on-chain data from Arkham and LookOnChain, an entity tagged as the 5K BTC OG transferred 500 BTC, valued at approximately $47.77 million, to Binance on January 18th. This whale originally acquired 5,000 BTC in 2013 at an average price of just $330 per coin. To date, the holder has offloaded 2,500 BTC, realizing roughly $260 million in profit at an average exit price of over $104,000. Despite the heavy selling, the OG still retains 2,500 BTC. Last up, in a milestone for European adoption, KBC, one of Belgium's largest banks, officially launched retail Bitcoin trading services on January 15th. This makes KBC the first major Belgian institution to offer direct crypto exposure to its clients. The move highlights a growing 2026 trend of traditional European banks capitulating to consumer demand, further integrating Bitcoin into the legacy banking rails of the Eurozone. Over to you, Naka.
Thank you, Sats. Our first story saw the Stacks Foundation wrap up a high-profile yield strategies panel on January 13th, featuring leaders from Zest Protocol and Hermetica. The summit focused on a singular goal, positioning Stacks as the primary yield layer for the $1.8 trillion Bitcoin market. Discussion centered on new institutional treasury frameworks and the deployment of sBTC as high-grade collateral. The event has sparked a surge in Bitcoin DeFi interest as traders look to Stacks to turn passive BTC into a productive, yield-bearing asset. This leads us neatly into our next story, which saw Stacks total value locked, TVL, maintain its momentum, holding firm above the $130 million mark. This stability is a direct result of the increasing utility of USDCX, Circle's native Bitcoin stablecoin, and the rollout of dual stacking incentives. Significantly, Stacks is showing a liquidity floor that remains resilient even when the broader altcoin market faces volatility, signaling a shift toward more patient, institutional capital perhaps. Speaking of capital, and Zest protocol has hit a major momentum milestone this week, officially surpassing 700 sBTC supplied on the platform. This surge in deposits cements Zest's position as a primary liquidity hub for the Bitcoin native DeFi ecosystem. Looking ahead, the team is gearing up for the launch of Zest V2, which is designed to radically streamline Bitcoin-backed loans. By introducing more efficient capital utilization and lower friction for borrowers, V2 aims to transform Bitcoin from a passive asset into a high-utility collateral engine, making it easier than ever for users to access liquidity without selling their BTC. And as the Stacks ecosystem scales, Bitflow Finance is tackling the barrier to entry for new users with the official launch of the BFF Army educational platform, a comprehensive curriculum designed to onboard the next wave of Bitcoin users into the Stacks economy. The platform provides structured, step-by-step guides covering everything from the basics, such as setting up a Stacks native wallet, to advanced, decentralized finance, DeFi strategies. By bridging the knowledge gap between holding passive Bitcoin and participating in active DeFi protocols, Bitflow is positioning itself as the primary onboarding rail for retail users. Analysts view this move as a critical piece of social infrastructure, ensuring that as network liquidity grows, the community has the technical literacy to utilize it securely. Last but not least, the Stacks ecosystem is officially a top-tier contender in the global developer race. According to the January 2026 Electric Capital Developer Report, Stacks has secured the number 7 ranking for total developer activity, surpassing major networks like Avalanche and Polygon. This surge is highlighted by a massive new milestone: 1,000+ active monthly contributors now shipping code on the network. This influx of talent is being largely attributed to the success of the Code 4 STX program, which has successfully funneled thousands of new developers into Bitcoin native building. With over 7,900 commits recorded in the last year, Stacks is proving to be the primary engine for Bitcoin innovation.
And that wraps up the Orange Weekly. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Until next week, may your walks be long.
And your treats be plenty.